This program might contain strong language. If you think you may be offended, switch off now.
Hello, everybody. Welcome back to the Inside Mojo podcast, where each week we're taking a look back at 20 years of history on YouTube with WatchMojo. I'm your host, Rob, and with me, as always, is Go Habs Go, Ashkan Karbasfrooshan, our CEO and co-founder. Ash, are you okay after the game last night?
I'm okay. I mean, as I said, I'm a pretty glass is half full kind of guy. Literally, it's half full. Look, we were not even supposed to be in the playoffs. We were supposed to be part of this rebuild. So we made it. Habs fans are crazy because they're all like, fire the coach. Yeah, you're a moron if you say that. But no, but it's just, I mean, we're down 2-0. It's fine. We defeated the Capitals in 2010 and 7. I would say the disparity between those teams was greater. Obviously, you know, I don't have any animosity actually towards the Capitals. There are some teams I just hate. Caps, I'm kind of neutral. Even though Washington stole our Expos, you know.
This is true. There's a history
there is a bit of a history. And I remember when I saw a Nats game like in 2012, it was like closure. You know, I was like, let's move on. Yeah, but look, I mean, it goes to show that like you have to play the whole match. You know, the Habs in the third period are like the reincarnation of the freaking Edmonton Oilers of the 80s. The first period, it's like they can't skate. You know, they just are a disaster. So yesterday we actually got the lead, but then we lost. But it's fine. And it's funny, I was thinking this is tied to Inside Mojo and today's theme.
Yep.
To get there. I've met two NHL team owners. Ted Leonsis, who owns the Capitals, and Jeff Molson, who owns the Habs. Two extremely different people. You know, Ted Leonsis, like an immigrant, Greek, you know, was an executive, made his fortune at AOL, eventually bought the Capitals. Jeff Molson, son of, well, great-great-grandson of, let's say, the founder of Molson Brewery.
Heir to the Molson.
Yeah, and then but to his credit, he didn't just inherit it. He actually went out, raised money in like 2009, I want to say, and maybe not 2009. No, much later, like 2000, in the 2010s, and bought it from George Gillette. And he's done a pretty good job. I mean, the Habs, you know, the glass is half full, and you got to win 7. And
that's
I
right.
believe.
Not over till it's over. We've been in this position before.
Not over till it's over. And despite the massive currency difference between the US dollar and the Canadian dollar, the Habs are, you know, very competitive. Obviously, it's a wealthy team. You know, they generate a ton of money. But these things matter, right? I mean, today I think we're going to talk a little bit about interest rate and make it relevant to YouTube and for entrepreneurs and storytellers. But, you know, all these things go into fielding a championship team, and you can't play two-thirds of a game is the bottom line.
This is true, as in business, as in sports.
There you go. Yeah, you can. There you go. I can't be like, oh, you know, like I'm just going to pay the bills 11 months. Something bad's going to happen if you do that, right? I mean, it's common sense. But
all right, let's jump into it. So today we're talking about 2022 and the end of the zero interest rate era. How did let's set the stage? What was WatchMojo doing in 2022, and how did this whole shift affect business?
Well, believe it or not, we actually had our record year, as I've mentioned before, in 2021. And 2000, you know, we benefited, as did most creators of home entertainment programming, you know, so it wasn't like we were shooting movies and sets and COVID shut us down. Obviously not a travel business. So we had a pretty good 2020 and a good 2021. And then when 2022 started, there was no reason at the beginning of the year to think that things would necessarily be different. Although if you just took a look at the chart of the NASDAQ, which is one of the main indexes skewing more technology, you were like, wow, a lot of these companies have seen massive spikes in valuation where there's no more fundamental rationale as to why an investor would pay, you know, 100 or 200 or 300 times earnings, when historically that average of price earnings, which is what you pay, has been 15 to 30 times, right? So now what we're looking at is the history of interest rates. And I promise not to make this boring and too financial, but it's important, right? Because what I learned in 2022 is that really the only thing that matters is the macro. It's like if you really benefit from low interest rates, which is ultimately the cost of capital, the cost of money, and money is cheap, then you could go access capital through a loan from a bank or an investment from investors, which could be a venture capitalist, an angel investor, or a private equity, because they have to go get capital somewhere, and there is definitely a cost. So actually, if you go back to that graph, if you don't mind, so what's important is the historical rates were always higher than they were in the 2010s and 20s. So let's discuss that a little bit.
Yeah.
There's a lot of graphs here. I found this morning, actually on, I think, Wikipedia. But so that red line, the effective federal funds rate, it's not really like overnight LIBOR or whatever, but it's basically just like the rawest form cost of capital that the Central Federal Reserve like lends money to the main banks. And then the same way, if you're selling t-shirts, you buy it for $5, you add a logo and you sell it for 15, or you pay your team $7 for labor or whatever. So then banks add, it's prime rate plus something. If you have great credit, you might pay a few interest basis points, a few interest points above whatever the rate is that costs them. But so historically, and something that people didn't know, I realized, again, I guess you have to study economics or finances, your real return is really whatever you think your return was less inflation. Makes sense. If you think you made 10%, but you've seen that meme, oh, you got a 5% salary increase, but inflation is 8%. Well, you lost 3%, right? Yeah. So really, as inflation goes up and down, banks adjust their fiscal policy in order to stimulate the economy. So let's just focus a little bit on what the hell happened in the 70s. There was like the OPEC oil crisis, there was stagflation. And inflation, it was both stagnant, meaning the economy wasn't growing, but deflation and stagflation meant that there was this inflation. So then to offset that, like you adjust interest rates. So interest rates, like when I was really young in the 80s, my dad was an entrepreneur, had successes, had setbacks and challenges. And I remember like him talking about like interest rates and all that. And kind of like at an early age, I understood that. But like when I started to kind of hear interest rates were always super high, right? And then like kind of I went through my childhood. And then that's when there was this long-term downward trend where banks just wanted to stimulate the economy. The governments wanted to stimulate the economy. So they were like, we're going to bring down the cost of capital, that red line, so that banks are more willing to lend out and investors are more willing to lend out. Now, a little parentheses, when interest rates are low, it's just basic math. The present value of a company's future earnings is worth more.
Okay.
Because interest rates are like in the denominator of the Gordon model, the growth model, the discount model in finance. But so long story short, we have all, like I'm 47, but if you're a 27-year-old entrepreneur or 30-year-old or whatever, you've always basically seen interest rates as like a non-thing. It's like always been low, never really a material cost of doing business. And then what effectively happened is in the late 90s, there was a stock market boom where, again, like the original kind of NASDAQ.com bubble boom led to prices being really high. There was a bubble. Bubbles always burst. The NASDAQ crashed. 9/11 happened. So in the 2000s, there was this kind of like desire to just stabilize the economy. And then because Wall Street are just a bunch of greedy, it's a cohort that really only, what they say, greed is permanent, fear is temporary. Then they kind of chased the latest new shiny object, which was mortgages, which was the theme in that, The Big Short, I think.
Yeah.
Which kind of captured, what happened in the Great Recession, not the Great Depression of 1929, but the Great Recession of like 2007-8, when Lehman, Bear Stearns, and all these guys blew up. So again, to kind of try to stimulate the economy, you see here that there was like a further downward trend. And then in the 2010s, the federal funds rate at some, I mean, the rawest form of interest rate, the cost was effectively almost zero. So you had basically in the 2010s, like when WatchMojo was really kind of, in the corner, blocking, tackling, doing the basics, there was a lot of free money out there. There was a lot of money that was easy to raise. Investors could go and raise a ton of money to invest because the cost was low. So when COVID hit, basically there were supply chain issues, and I remember like going grocery shopping and I was like, hey, bacon used to be $2.99 for like half a kilo. And I was like, it's now $4.99. It's now $6.99. So it's funny that even I, a relatively like well-educated, knowledgeable, smart, sane person in finance, at least, I could see prices go up. But even I was like, okay, there's no structural change. And because no matter how experienced you are, humans make the same mistakes, basically. But so I could see inflation going up and you could see supply chain. And at the time, they were like, inflation is transitory, which is like basically just temporary. It wasn't. Those supply chain shocks took years to remedy. And I would say only now inflation rate is going up. But so what happened was when inflation was just off the wazoo and people were still like in this mode of, money doesn't cost a lot, so I could invest loosely, I could loan aggressively. The economy needed to slow down a bit, which is a weird thing where you almost have central bankers, the way you would force like a patient in a coma to avoid death. Economics, you do sometimes force a recession, as crazy as it seems, to slow down a very hot economy where inflation is high. Why? Because, look at what happened in Germany, right? I mean, there's a lot of reasons for it in the 20s and 30s. Hyperinflation led to resentment, which then paved the way for Hitler to come and say, hey, everything's out of control. And when I go, Trump is no Hitler, but the parallels between Germany and the US with like inflation and pointing to immigrants, even though like Trump's policies against Latinos and the Muslim ban means there's less workers, cost goes up. That's why Trump is not exactly an economics major. But so in 22, when the year started, there was like business as usual, there's no problem, but inflation stayed high. And around, I want to say, whether it was March or April, they decided to boost interest rates very quickly. And it kind of slams the brake on the economy. So you need the background because otherwise I feel it's a bit weird to just.
Yeah, and I don't have a degree in economics or anything, so this is helpful for me.
Yeah, so it's people, but I said, if you don't understand the macro, like if you're an entrepreneur and in 22, the second half especially, you were going to raise money, nobody was going to give you money because the investors were like, well, let's look at our portfolio because some people are going to need to raise more money and the markets are tightening up. But so what happened was, now this is where my economics thinking kicked in. I said, look, even though we are not affected, like we don't have debt or, we're not necessarily in lines of business where immediately you're like, we're screwed. I was like, companies are going to scale back. When money was cheap, they were all over hiring. Google was launching YouTube Plus or Google Plus to compete with Facebook. Facebook was launching Facebook Watch to compete with YouTube. Microsoft was getting into content, out of content, doubling down on gaming and retrenching, right? Because money was cheap. So instead of leaving it in your bank account and earning, and I know we have a poll we want to ask, and earning like no interest if you just have cash in your savings account, people were very loose. They were very speculative. But then once interest rates went up, everybody started to ask, twice, like, hey, do we need to hire Joey? Like you actually during COVID, it was because of COVID when you reached out and then we said, let's revisit this because as we talked, we were just shifting to work from home. But if somebody in 22 was like looking for work in January, they could find it like this. But by September, nobody's returning your call because companies are like, maybe we overinvested. And so once companies like Google, Verizon, Samsung started to question their investments, question their headcount, well, guess what? They also question advertising. So there was a pullback in advertising, and that's why 22 was our first down year. Now, if like our bigger peers were down, random number, 40%, 30%, we might have been down 10%, 15%, especially after like a rocket ship 20 and 21.
Yeah.
But it sucked because you are in a precarious position where you start to worry about your team and layoffs, and then you're like, okay, is this like transitory? Is this temporary? And you knew that after COVID, it was not temporary. You knew that there was this new world order, and things were going to change. So we actually went through a really, really challenging 22 and 23. And as much as people are like Ash is very excited, or I was actually pretty calm considering how hard it was, because you're like a captain in a ship that's going through a storm. People, like when I'm flying, I look at the flight attendant when there's turbulence. If they're panicked, I'm going to be a bit worried. But if they're there, could care less, you're like, no, it's normal.
Yep, that's a good indicator. I do want to touch on the poll that we put up on the WatchMojo YouTube channel, so head over there and check that out. We want to know which of these investments suit your risk return profile the most. Is it Bitcoin and crypto, stock market, cash savings, bonds, or if there's anything that we didn't list, add it in the comments and we'll check that out at the end of the episode.
Crack cocaine, the ROI. I'm kidding.
The ultimate investment.
Because even to me, the finance guy in me, I'm like, stocks. I mean, are you talking value stocks or high growth? But yeah, for the purpose of the poll,
just lumping categories together.
That's fine.
I'm curious, when WatchMojo was getting off the ground in 2005, 2006, do you think that it would have been possible in an era where the interest rates were significantly higher?
Because I'm like crazy and decided to risk every penny I had and then go into debt. Well, let's actually separate that until the debt part. So I was going to take a risk. Like I was eager, I basically left Askman, pushed out, whatever, but I was like eager, ambitious, driven, insecure, like want to prove to the world that fuck it, there, I can make something happen. I would have done this regardless. Like interest rates could have been 20%. I wasn't going to go take my money and put it in a bank, even if you're like, hey, 20, like even 8% a year was you would take, right? And again, if you put your money in the stock market, the historical 7-8% return of the S&P and the Dow, you double your money in 8 years. That's like why compound interest is the eighth wonder of the world, right? I would not have. But you ask a very interesting point, because when then I ran out of money 2 years later and I went to the banks, the banks were not going to lend us money in the kind of 2022 environment where everybody is looking at their loan portfolio, any mortgages going down, any bad debts that they have. And that's what happens. That's what happened in the 2008 Great Recession. So I think I would have started the same way. But obviously, if interest rates were higher and debt markets were tighter, then no, I don't think I would have been able to go get, credit lines. I actually got a mortgage on my place because the WatchMojo wasn't a business. People would look at it. They're like, okay, I have a shrink here. You should talk to somebody. Why are you burning money like this? But the point was, it was a very, very speculative era where cheap money explains why every other day we had a competitor in New York or LA or San Fran launching, and they would all take strategies that sound good to investors, like we'll scale overnight and we'll automate production, where I, as a storyteller media guy, was like, that's bullshit. Like content farms don't make sense. And AI is a tool, and it could be a creative tool, not just the operational tool. But you need people to tell stories, whether you like it or not, Mr. Investor. To the delight of probably our colleagues who are like, it's good that Ash feels this way. But I'm just saying there was a lot of my peers that were like, no, we're going to do it differently. So they could raise capital really easily, whereas I was like, nope, like my goal isn't the lowest cost. It's low enough is good enough. It's quality, it's balance, right? But it was hard because there was so much competition because money was free. So it's really hard to stay to not just like your principles in terms of fairness or whatever in your mind, but just in terms of operational, you see just a bunch of idiots lining up one after another, jumping, like running faster and jumping faster, quicker off of a cliff. And you're sitting there and you have to be positive. And sometimes you're like, well, maybe it's me. Maybe it's our business, right? So, and then that also with YouTube, I don't think YouTube, frankly, would have survived if it wasn't for ZIRP. And the level of competition that they faced, absolutely. I mean, we could expand on why YouTube, but ZIRP just led to, the whole ZIRP era phenomenon became a meme where it was things that only made sense because money was cheap.
Yeah. Well, that's the thing. You mentioned your examples, Google Plus and Facebook Watch, things that don't exist anymore. So ultimately, was this a good era for companies? Like, did they really have, positive effects, or was it just like one failure after another because people were taking stupid risks?
I mean, the reality is both. And I'm not trying to be evasive. It's because, if you had a quick, like Google was not the first search engine. It was actually the 13th search engine. YouTube was not the first video sharing platform. So I've said it, you never want to be too early before consumer demand is there or consumer behavior is shifted, So timing is key, not just for the small startups, but for the behemoths as well. So I think that ZIRP enabled this environment where capital was accessible. You could raise money, you could hire people. But the people that built the internet were the misfits and the rebels and the risk takers. I'm not saying now, but people that work at tech companies, it's like the least risk taking people, which explains why sometimes innovators also die. I think Google CEO is a brilliant individual. He seems like a great person as well, but sometimes people criticize him because he's not like an entrepreneur. Maybe he might be entrepreneurial. He's probably more entrepreneurial, but the skill set you need to run Alphabet, he probably has it. But they needed outlaws at first, right? So it was just a different era. And when I taught at McGill, I kind of took everybody through the .com bubble because it was kind of like the history of entrepreneurship. So when we got to I was like, that was just another era. It was a bit like those few years when like you lived in Brazil, it was like it was a different reality. It wasn't like normal today type of thing.
Mm-hmm.
But yeah, I mean, obviously it also benefited them in the sense that once they had built these dominant positions, it became harder after ZIRP for companies to compete against Google, because you really needed a shit ton of money. Even now, like OpenAI has raised a lot, like war chests, but it became harder after 22 because the cost of capital goes up. But once you're, let's say, OpenAI, that expression, you don't have to outrun the bear. You just have to outrun the other people trying to outrun the bear.
Mm-hmm.
So it's like everything you could use at your advantage if you had not the first in market, because those guys usually die. But if you're early enough and your timing works, yeah, you don't care if cost of capital goes up. It almost becomes a moat. And in some ways, you guys have heard me say this. I'm like, it's weird. I'm not the one that's like, oh, let's do this overnight. We're successful. I'm like, good idea. Are we willing to do this for a year or two? Because that's how long it'll take.
Yeah.
Today, people don't have that luxury. Things cost more. Money costs more. So people are more impatient. And we've seen a lot of direct and indirect competitors kind of give up, saying, well, you know what? This isn't lucrative. I don't see how I can make money today. And I'm like, yeah, you're not going to make money today. You're not going to make money tomorrow. Are you patient? So, I think interest rates could be, an asset or an opportunity or a threat, depending on your stage.
Let's talk a little bit more about YouTube specifically. So it's an interesting situation that, we've been talking about how WatchMojo's history reflects to some degree YouTube's history, as we've both been around for about 20 years. With WatchMojo's first down year in 22, how was the platform affected in a broad sense? Was it the same type of thing, financial struggles, or how was YouTube being affected by this?
So YouTube had a meteoric, obviously, like second half of the 2010s. We actually had our meteoric, like hockey growth years where we were growing revenues like, let's say 100%. It might have been 60 or might have been 300, but like high rates of return in like 2013 and 14, because one, it was a small base to grow off.
Mm-hmm.
But we were just like in 2014, like the 7th or 8th largest channel in the world. And, people like, do I miss that? No, because it was also like nobody took YouTube seriously. Today, literally, we might have a smaller piece of a pie, but that pie is a lot more interesting. But what I'm getting at is after many years in like 2018, 19, 20, and 21, when YouTube was growing like 30, 40% a year, if not more, and starting to surpass the revenue at the NBCs and the revenues at like traditional TV, yeah, YouTube hit a bit of a wall as well. But again, it was because they had a meteoric growth after COVID. So the year over year, 22, 23, when you look back, hey, how do we do last year and how do we do this year? They also experienced a bit of a slowdown, and we generate a lot of revenues through programmatic, which is targeting people based on profile and data. We generate a lot of revenue through YouTube's AVOD, advertising video on demand pipeline, where Verizon, Samsung could be like, I'm looking to target a handsome Montrealer named Rob who may be looking to buy a new phone. Oh, look, you Googled like a phone model 3 days ago. So they're like, ooh, let me serve this ad.
Yeah.
All advertisers are reducing or not increasing. Many are reducing television spend. They've already killed print. Radio isn't really a growth market. So all that money is and was flowing to internet. Historically, it was going to search and display, but video was basically having its rocket ship years. And yeah, so there was a bit of a slowdown, and that's basically why we saw a little bit of headwinds. And I would say now in like the last 9 months, we've been growing again. And I think, yeah, we basically now are in a very good position because we didn't panic, like it was tough. And it's helpless as an entrepreneur. Like I empathize, for example, now when I hear like I'm apolitical. I don't really have views because I see the good and bad in everything. But so like I understood why Trump won, but I was always like, Trump is not a serious guy. He doesn't have policy. He doesn't sit there with experts, educate himself, and go, this is my opinion. He just verbal diarrhea 247, and that's fine. That's his style. I'm not questioning it. Americans want that. Americans don't want boring. Fine. This is what you get, the chaos president. I don't gloat, though, when entrepreneurs, founders, business owners now go, oh, my God, tariffs killed my business. Or, oh, my God, I can't find, labor because, there's less people coming in the country or whatever. Yeah. I don't gloat. I'm like, it's unfortunate, right? But ultimately, I also do think, though, that, like, you do have to just be realistic that business is meant to be hard. You know what I mean? And I don't want to say this to them, but just in this context, that in the 2010 to 2021, because interest rates were low and VCs needed to invest in a startup to start earning their management fees, they kind of shat the bed with entrepreneurs and entrepreneurship. They kind of ruined it where everybody could go and just raise money with like a safe, simple agreement for future equity. It was like bullshit. I saw so many entrepreneurs that really needed to go and first get jobs at organizations, large or small, and maybe prove themselves to be entrepreneurial, and then maybe become an entrepreneur. But every kid would come, I'm raising this app that does this thing. And I was like, this is all bullshit. You're bullshit. The world is bullshit. It's true. I was like, you're smart, but go get some experience. I've said it. I started WatchMojo at 27. So in a way, we're still kind of flushing the system with the excess indulgence of ZIRP. And I think now with the tariff stuff, it's unfortunately going to get amplified. And I don't think people understand just how disruptive this is just in your planning. So I think we're, just as we kind of saw a light at the end of the tunnel, yeah, it is going to be more challenging. But again, that bear analogy, well, we still run a pretty lean team and we are pretty, smart about things. And it's again going to be harder on others who maybe don't have those same things because maybe they were a bit more loose. And I think this is just a reality going forward, and not just economically, but I also think geopolitically. I mean, we were not joking, but I was like, okay, the year starts off Russia, Ukraine, hot mess. Then it's like a Royal Rumble. Then Israel, Iran, and the US are like jumping in the ring, like, we're here, we're also crazy. And now Pakistan and India, two people who are, both countries are India is very heterogeneous. Pakistan is more homogeneous. So I recognize the disparity between people. There's not even one such thing as an Indian, but Indians and Pakistanis are very similar, if not for religion. But now you have this religion that is going to drive these two nuclear powers to maybe a conflict. So it's like, there's so much shit going on that I'm just like, okay, I just wake up, take my kids to school, come back, answer your guys' emails, and just go to bed and just repeat, and then just hope the Habs win, right? I mean, it's kind of like, what do you really control? You don't really control that much, right? And
Yeah.
that's the reality of entrepreneurship. It's a paradox. You think you're in control, but you're at the mercy of Donald Trump's tariffs or Pakistan nuking Delhi. Like, you're like, what the fuck?
Yeah, so let's talk about some of those intangibles a little bit. Like you mentioned tariffs, but realistically speaking, how could that impact things moving forward, and how does it add an extra layer of complexity on top of this situation?
I think first of all is, depending on the industry you're in, you're either directly fucked or you're indirectly screwed. It's a bit like COVID and the Thanos analogy. Sure, if you're in travel, hospitality, live concerts where, you know, topless raves or whatever, yeah, you got affected right away. You're not going to go rub Vaseline on your face and listen to techno, maybe. Not that I ever.
You're talking about the COVID.
Yeah, we're starting there, right? But I'm just saying, even WatchMojo a year later, we're like, oh, the tsunami hit us now. Obviously, we got affected because all these advertisers scaled back. So similarly, if you were for sure, you know, a phone, actually cars is the best one. Cars, there might be aluminum from Canada that gets shipped to the US, where at a plant, they assemble it, and then they might ship it back to Ontario in Canada, where they add a component, and then it goes back somewhere. So once you start, you know, adding tariffs, even if you don't have that back and forth, it's not just an added cost, it's just an added hurdle, right? So all those businesses are going to be affected. Now, they may need to, you know, use their capital to store inventory. That has a cost. So effectively, costs go up. And this is why Donald Trump, our supreme leader, chief economist, when he's like, China pays the tariffs. No, you fucking moron. Consumers pay the tariffs in the end. That's really the impact you should care about if you're America First, because your consumers have to fork over. Even Procter & Gamble, Crest Ivory and all that company, which is a defensive company in poor economic periods, because people in theory still need to brush their teeth and buy soap. That's the thinking of defensive kind of stocks. Today, the CEO of Procter & Gamble said, expect increased prices before long, because there's just more cost to it. So what ends up happening in that Thanos analogy is, let's say us, WatchMojo, we're like, oh, we're not affected, business as usual. Let's go hire 20 more people. Well, no, you moron, Ash, because in 3 months, if Procter & Gamble prices go up, people buy less toothpaste, they brush their teeth less, they use less toothpaste. Procter & Gamble isn't going to be like, oh, let's go advertise more if the economy's not doing well. Companies only advertise more when the economy does well. If they feel like, hey, consumers are losing their jobs, we're living in Mad Max times. Why is somebody living in my back alley now? Oh, look, there's a homeless guy in my car. Wait, that was our neighbor. He's homeless now. You know, like then Procter & Gamble's going to advertise less. And then we're like, oh, wait, we're not making as much money. Now, long term, we're in the best lane. We're on YouTube, digital media, you know, but it's not good. But I also, the reason why I don't complain, I mean, we're discussing it here, but I'm not there. Like, I like Dave Portnoy, the Barstool guy. He's obviously a very successful, clever guy. But when he goes there and he's like, oh my God, my portfolio is down 20 million or 10 million. And he's like, it's 10%. I'm like, bro, you have 200 million bucks then. I wouldn't be complaining, because there's people who are losing their jobs. It's tone deaf. Now that's his shtick, you know, so I don't complain. I'm like, WatchMojo may have some challenges, but well, compared to all my neighbors who are running, you know, manufacturing or other industries, they're going to be like, shut the fuck up.
Much more challenging in the short term.
Exactly. And long term, because their entire business models could be, there was a guy yesterday on Twitter, on X, and he was like, and it's like, people have no fucking principles. Like a month ago, they were all principle, America first, this and that, or Trump. And now he's like, I'm done with the tariffs because it hit my wallet. One of my businesses now no longer makes sense. And people in the comments were like, well, first of all, you're a sellout. You're not American. But forget that. Let's just set that aside. But he just explained his business model, and he goes, with the tariffs going up 100, like even if they go up 20, 30%, he's like, my business model of importing, you know, ingredient X no longer makes sense.
Yeah.
So he's like, I'm not going to buy 1 million units and store them for the future. He's like, just, there's no more business. And that's the thing. Trump has he has no empathy. Trump has no like experience, you know, the drawback, like when Bill Gates was like, how much is, you know, soap? And like, it's good to go out there and talk to people and see real life. Right. But so Donald Trump never experienced that. Right. So when he does these things, he doesn't understand the effect it has on the average person. And I'm not saying they're not exceptional at what they do. I mean, average in terms of whether you're a doctor, a scholar.
Yeah.
You're not like Donald Trump. basically, you know?
Yeah. Forgive me if this is a ignorant question, but I don't know, maybe others are think the same thing. But one of my understandings was that the long-term, I guess, strategy would be to bring more businesses, more manufacturing into America so that there are less imports. What do you think about that? Like,
Okay. So first of all, as Aristotle would say, there are no ignorant questions, just ignorant people. I'm joking. Aristotle never said that. That is not a lie. I'm just kidding. But there are no ignorant questions. That's a great question. So the problem is, again, the macro. So Trump's tariffs still need to be put in a bigger macro, which include timing. Guess what, bro? Americans do not want manufacturing jobs. Americans don't even want office jobs, like in office, 9 to 5. So manufacturing, if there's not demand for those jobs, and the rise of automation and robotics, and this has been going on now for decades, you know, like automation has been like Taylorism and Ford and all that. I mean, automation is nothing new. We get afraid of AI. It's just innovation and technology. Yeah. So to show you, like, I'm not these guys that bash corporations, you know, but I see all sides of it, right? Everything is good and bad. Well, most things are good and bad. But corporations are so greedy, and you expect just them. It's just, you're not surprised. When McDonald's, I don't want to throw McDonald's under the, McDonald's could do good things in society and community as well. I'm not these anti-corporation guys, but especially since I run a corporation, a small one. But like McDonald's, when faced with just paying people $15 an hour when the law raised minimum wage, they just said, fuck it. They just all of a sudden, you might have noticed, you go into a McDonald's now, everything is just a touch screen.
It's a screen, yeah.
So they're like, great, you know, we're just going to take this path. We're going to go faster. So the problem with Trump's fundamental issue, aside from one, not understanding tariffs, not understanding a trade surplus, I might spend a couple $100 a month at the grocery store, and the grocery store is not paying me. Why is that the grocery store's fault? You know, it doesn't work like that. The economy and comparative advantage, the fundamentals of macroeconomics, is that you might be producing bananas, I may be producing phones, and demand is coming from different places. You can't go to China and just be like, well, we don't like this or that. So, but you could if people did want manufacturing jobs and it wasn't like automation. So the end goal, it's like you chase a dog and then the dog stops and now the dog's going to bite your face, right? So it's not like he really understood the fundamentals, and it's definitely not like he could foresee the consequences of his action. And look, I personally have not sold a single share in the stock market. I'm like, I don't care. Like it's long term. I'm not going to start distracted because you can't time the market. The key in finance and investment is time in the market and not timing with a G in the market. The idea is if you just leave your money, even when there's bad days, historically the best days come right
on a
after.
long enough timeline. It's
exactly. Yeah. So exactly. So you know, so you don't want to panic in that sense. But I mean, the smartest investors are basically now ringing bells and saying, no, this is a structural change. Also, imagine if I, as the CEO of this company, so yeah, I always say we're teammates, we're on the pitch, you know, that's my mentality. We all work together, but I'm not intellectually dishonest. Yes, I'm the boss, I'm the CEO. But imagine if every day I flip-flopped. Would you have confidence? Would you tell your spouse, your family, like, hey, I work at WatchMojo. I don't know if today we're going here or we're going there. I don't know if we're, you know, vegan menu or it's a carnivore. Like, you'd be fucking confused. You'd be like,
yeah, stability is important for leadership.
There you go. So if you are any company, if you are any government, do you really trust America anymore? Okay, maybe in 3 years, Donald. First of all, it's only been 4 fucking months. But
feels like longer.
Mike, I had hair like Fabio, you know, like it's batshit crazy. And it's like on every front. You know, it's like, again, I'm mainly Canadian. I love America. I was born in Iran. I'm very interested in Iran. It's a bit like when it comes to Iran, it's a very touchy and it's very, my God, that should be a podcast. But you do have like these two different sides. You have a side, ironically, I think, let's not get too, I would just say that you have two sides who are very different in their vision of what Iran should be. Every day Trump says one thing or another, you get one group that's like, Trump is the best. We love him. In him, we believe. He's our, you know, savior.
Yeah.
The other side is like, this guy's a bumbleclad bitch. We hate him. I can't believe we trusted him. Then the next day he comes out as a barometer of how he oscillates and he fluctuates. And he'll say something that the other side likes. Then the other side is like, we love Trump. See, he's so wise. He's not like these globalists, these whatever bullshit. Like, and then the other side is like, well, we are disappointed. And I'm like, I tell the ones I engage with on both sides, I'm like, stop thinking this man sits there and goes read history books, talks to experts, he's just off the seat of his pants, right? Mm-hmm. So that to me is a great barometer of how inconsistent he is, because he's like that with everything, right? So yeah, I do think though that a lot of companies are like, well, okay, if Vance wins in 28, Vance, you could hate him, or he's a smart guy, he's a clever guy, well-spoken, to paraphrase Chris Rock. He could go easy on the eyeliner, but I don't want to knock him.
I haven't noticed, to be honest with you.
I mean, if he likes to wear, if that's a natural look, then it's great, I guess. That's interesting. But my point is, Vance is going to be a formidable guy in 28. And then I still think Trump, Ivanka eventually is going to just run for it. So, but what I'm getting at, even if you're another government or country, you're not going to really look at this as, oh, it's just 3 years. You're going to be like, yeah, we don't think America is this safe place for us to be. Now, there is this other thought where you'll hear NVIDIA, Samsung, countries, but usually companies being like, we're going to commit to spending $1 billion in the US. Okay, some of those turn out to be true, but it's bullshit.
Okay.
It's 100% bullshit, because if I wanted to create a video, it still takes days or weeks. So what do you think is the likelihood of them building like a manufacturing plant? They might say, we're just going to say this to him because in 3 years he's gone. And I know for a fact, because these are the fiber of these people who run these organizations. They don't have any principles, really. They don't have any, like, they just are kind of thinking near term. So they're like, let's just say what this guy wants, and then we'll just do whatever, because then in 2 years he'll be focused on the election, and he's not going to come back and be like, you said you were building a plant in Tennessee. You know what I mean? So
right.
it's
companies are just going to weather this storm, but not really follow through with any.
And the reason why I'm disappointed, like, I've written stuff that not praises, but points to Trump's, traits that he has that appeal to his base. You have to be like intellectually dishonest not to realize what is it about him that people like. But I also criticize everybody. I think that's fair. The thing is, Donald Trump, I think people have learned now, like the Jeff Bezos, the Mark Zuckerbergs, that you do have to just pander. You do have to butter him up. And then you might not get what you want, but then you're not going to be the target of his rage.
Okay.
Right? So I think there's a lot more people in governments that are just humoring him. But one by one, first of all, forget that all the tech leaders lost paper losses, wealth, like shares. They lost hundreds of billions of dollars in this market correction. In a few years, it'll be higher than ever, and they'll get the last laugh. But you also see a lot of Wall Street CEOs who kind of learned not to just be like, he's unfit for the White House. Jamie Dimon, who I think would make a pretty good president, he's the CEO of JP Morgan. Jamie Dimon was like positive, let's say, at before the election. Now, I do think privately, a lot of leaders are at least trying to talk to him to say, hey, like, there will be, what I read, I don't know if it's true, Walmart, Target CEOs told them that in a few weeks and months, you are going to see some empty shelves. It's not going to be Yugoslavia 1974 there. No knock at Yugoslavia and Croatians, Bosnia. But I'm just saying, like, like the Eastern communist bloc shelves imagery. And so I think he is not neutered, because you don't change. You don't teach an old dog new tricks. But if you think of him like just yesterday with China, he was like, yeah, no, it won't be 145, won't be 0, but it'll be much lower. Okay, well, then you're fucking, the thing he likes to grab, that's what you are.
Understood.
Because you just backtracked. You bluffed. You admitted to the whole world that you're full of shit, And like, I don't really care. What is he going to do? Shut down
WatchMojo.
I mean, he's got bigger critics, right?
I'd like to see him try.
No, but I also I do. I don't want to say I like him. I do understand his appeal. I've always understood his appeal.
Yeah. All right. Well, we got some interesting poll results for the poll that we put up earlier. We wanted to know which of these investments suit your risk return profile the most. And Bitcoin came out in the lead with 53%. So we have some crypto investors. I am a little bit surprised, but I didn't know that there were so many Bitcoin fans out there.
Yeah, I mean, again, you're asking, it's like the propensity of a YouTube viewer, and now in week like 13, let's say, or 14 of this podcast, the people now that YouTube is serving this to are probably a bit more entrepreneurial. They're maybe creative, or maybe they're just interested, or whatever. It's not surprising, right? If we were sitting here talking about insurance or taking care of your will, like an older demo, let's say, I'm sure it would be bonds and even the stock. So it's surprising, but I guess not. But what I find really interesting is that the stock market and the bonds are tied.
Yeah, 16%.
Yeah, because bonds were left for debt. The reality is, I mean, I'm a finance guy, right? I mean, so bonds actually explain the economy more than stocks. Stocks obviously capture the confidence that investors have in a company's earning power. But bonds is what determines things. And so the reason why and I'm surprised I didn't mention this, the main thing about Donald Trump's tariff and reason to almost force a recession, like if we're going to be fair, you could criticize Biden for being senile if he said something through. It's all good. Fuck Joe Biden. I don't care. Like, that's not my point. I'm not here to defend Joe Biden. He was a good man, I think, overall. I think he was very unfairly vilified for his age and many things. And it's not right for, corporations shoot their CEOs at 65. I don't think it's normal for countries to be run by like an 80-year-old. So that I'm not defending. But the difference was Biden left a pretty good economy overall. I'm not saying people are not struggling. I'm not saying there are not pockets of, underperformance and struggle, obviously. And that you have to address as a policymaker. But Biden handed off an incredible economy and like incredible employment levels to Trump, who wanted, just Google this, he wanted to force a recession so that interest rates start going down, that the Federal Reserve would then say, okay, we brought up interest rates, we can now bring them down because the economy is not hot, it's cooling down, so we need to stimulate the economy. Forget that he also is heavily leveraged debt. He has a lot of debt. So he has a personal interest for that.
Yeah.
If you have a mortgage and your mortgage is $100,000, okay, it sucks if interest rates go up and down. But imagine if you had $10 billion worth of loans to God knows who. Well, yeah, you want lower interest rates. And that's the shocking thing here that people aren't focused on. But in any case, what ended up happening, and this shows what a moron he is sometimes, interest rates actually went up. Why? This is a bit technical. Japan, not even China. China owns a lot of treasury bills and debt. When America wants to go invest, whether municipal, government, or corporate, they go get investors somewhere. Sometimes they're American, sometimes they're European, sometimes it's China or wherever, elsewhere. But so China is sitting on a ton of debt of the US. They didn't do anything. They didn't even blink, right? Japan started to dump, like our ally, you would think. Yeah. They started to dump. They started to sell a lot of their bonds that were American because they were like, well, we don't have the same confidence in the economy going forward. What happens if you sell a bond? If you are trying to raise money, you have to make it more enticing. The way to make a bond more enticing is offer a higher interest rate. Ergo, interest rates started to go up. So Trump's entire bet that I'm going to do tariffs to raise money, because eventually he wants to have no income tax. So he's hoping, and that's also a false idea. That doesn't work in 2025. And then two, I'm going to slow down the economy to bring down interest rates. It backfired. Once interest rates shot up, and that's why I go, the bond market is where you should pay attention to. That's when he started to back down because he was like, oh shit, if interest rates actually go up plus everything else I've done, then he's going to be known for destroying the American, not just economy. And I don't want to be dramatic, but the average age of an empire is 250 years old. I think America is resilient. America is going to survive anybody, but next year it turns 250. And as we were joking, it's only been month 4,
We've got a video coming up on that about the American empire, the average age of an empire, and how American is turning 250. So that'll be an interesting one to see. Just want to finish up on the poll. Cash savings, unsurprisingly, comes in last. Which savings at this point is not even an investment because with inflation you're losing money year over year. So
I mean I don't think leaving money in cash or savings is like ever a good idea, unless it's like a little bit because you want to be liquid. But especially in an environment like this where inflation is high, your money does lose value very quickly.
All right, so let's do a little preview for next week's episode. I think we're still working on the doc. Is that right? How's that come along?
No, the doc is good. So actually, since last week, I started to kind of shape it and mold it a bit more. And then also because of the 20-year anniversary, seeing a lot more articles being written about YouTube, I did kind of update it a bit because the script was written months ago. I just was like,
needed some refreshing.
No, I didn't. Not refreshing, just updating it because YouTube is the world is changing. I mean, that's also a reality that just whatever was the situation status quo in anything a month or two ago, it's really fundamentally different now. And not to be dramatic, but there's a lot of people that are like, the way they view US and everything, unfortunately, has shifted, possibly even forever. So.
All right. Well, in the meantime, next week we will be talking about the difference between bootstrapped companies, I guess, versus VC or PE-backed ventures. So,
and we're doing it on Friday because we're both traveling.
Yes, we will be away next week. So next week's episode will be on Friday.
You want to talk about where you're going, or you want to keep it on the down low? What do you? Is this top secret mission?
I'll just say that I was invited to Washington, D.C. to attend an event where members of Congress will be briefed on UFOs or UAPs. So very interesting. I should have some, follow-up content for our Unveiled podcast. I am very much looking forward to that. So maybe I'll let you guys know how it goes.
And I'm just very happy for you. And that's the thing again. Like it was a topic theme. You started doing it. It snowballed. And now you're getting invites apparently to go rub elbows with, Donald Trump and then plan to, invade WatchMojo in Canada. No, but it just goes to show, there's so many people that sit and wait for everything. And you do have to create things, you have to create stories, opportunities, and then things, you know what I mean? Like if 4 months ago, I would have said.
I would have never guessed that 6 months ago that I would be doing what I'm doing now. So,
yeah. And I'm very happy and relieved. I was a bit anxious all week because our friends in Brazil decided to require visas to enter the country. I'm going there for Web Summit. And I did not have my visa until literally like 30 minutes before the show. So I was like, if I show up there at the consulate, I'm like, some security guard's going to tackle me type of thing because you're going to show up. But I got it. So, I'm going to be also back.
That's
we'll do it next Friday.
Excellent. Well, it's going to be an exciting week, and I'll see you guys all next Friday.
Cheers.
Take it easy.